TheoTrade. This is Don Kaufman, July 21st, 2021. 6 minutes to go to the cash close here on this Wednesday afternoon. The SPOOs once again running to the upside. Yet another 30 handles. But one of the things that I really want to point out in this evening's video, and it's something I was actually mentioning just a few days ago on the weekend update, the Nasdaq continues to actually lag the broader markets. And when I'm talking about lagging, I'm not just, referencing like, oh, they're just not performing as well. They're not performing as well to the upside or the downside. And basically what it comes down to it, on a percentage basis, the Nasdaq that's just not getting it done. And it's definitely not getting it done according to the implied volatility, which I'm going to show you here momentarily. With that, let's actually break down the markets. Before we go too far, break down the markets, a little bit of today's trade action. One of the first things I did want to point out, so on Monday, we have some pretty wicked sell side activity. The marketplace cracks to the lower edge of the expected move, rallies up, obviously. On Tuesday, just a smoking rally to the upside. Yeah, and there was also absolutely unequivocally no volume. Just to throw a couple of statistics out to you, if you took a look at the number of option contracts that traded, the number of option contracts that traded on Monday, you were at 46 million. On Tuesday, you were at about 35 million. And today, people, I don't know, but it's going to be light because we just, this second, again, we have 5 minutes to go to the cash close, and just this second, we're only passing through 1 million S&P contracts traded on the day. And you're like, oh, whatever, man, that doesn't make a difference. It does. There's no hedging activity going on right now. In fact, just to show you in the S&Ps, to show you how critical this is, no one is involved inside of today's rally. All you basically have right now is there's a little bit of gamma risk, a couple of retail clients maybe go out and buy a couple of call options, and that ultimately sparks very minimal hedging to the upside. But lo and behold, this is some of the lowest volume that we've seen now in like the last 2 weeks of trade. And you have to point this out because, again, in the sell side activity, everybody's positioning themselves, everybody's running scared, maybe people exiting some positions, but they're not re-entering into the positions if that's the case. And again, everybody tries to come up with different cases. Why is there not volume to the upside? The bottom line, not a lot of capital, not a lot of commitment. This is, again, all you're really seeing is a bit of a gamma hedge. This is not a lot of institutional activity. This is mitigating exposure of existing positions at this point in time. All right, so let's spin it around here. Again, there are 3 points that I want to make on this evening's video. Number one, of course, is going to be the Nasdaq. And Nasdaq, one of the things I was pointing out on the weekend update, and there's a couple of different ways we can look at Nasdaq. Yeah, we can look at Nasdaq futures, right? You look at Nasdaq futures, which have got a nice bit into the close here today, but neither here nor there. The aspect I think I'm going to start with is the QQQ, because the QQQ it's kind of permissible for like everybody. Not everybody's necessarily a futures trader, but follow along over here. I'm going to go ahead and I'm going to close up that left side bar with just 3 minutes to go to the cash close. I want to come under studies. Come under studies, and we go add study. We go down to volatility studies, and we cruise up. Again, we're going to look at historical volatility, and then there's this volume bar in here. Let's get rid of that. Come over here to the sprocket, click on equity, show volume subgraph, hit apply, hit OK. It's gone. One of the things, it has just been, it's not just bothering me at this point, it's absolutely tormenting me how low the actual price action is of the QQQ. Now, granted, what you're looking at here is historical volatility, which is it's looking at past stock price movement. And what is that past? Well, right now I have that past set at 20 days. That's kind of the standard. So it's averaged over the last 20 days. And just the bottom line is anywhere inside of the last 9 months of trade, this is it, baby. This is the lowest we've pretty much been. And I think it's worth noting. Let's actually come back a little further in time. Let's go back full 3 years. Now, this is a 3-year based on a daily chart. And there have absolutely, unequivocally been times, okay, when NASDAQ volatility has been dead. Okay, and this is, again, we're looking at price action. We're not even talking about implied volatility. Implied volatility is the forward volatility. It's the volatility that actually comes from the options. What I want you to see here, though, price action inside of the NASDAQ is effectively lying dead on the floor at this point. Okay, clearly we expect it to pick up. But the point that I'm trying to make with this, right? And let's tighten up the time frame once again. And you know what? I'll come down to a 1 year and I'll zoom in for just a second. This number off to the right-hand side, again, you can't discount this. Basically what it's saying is it's 0.09, which basically breaks down to, and we'll just round it, it's 10%. Okay, so you can actually say that this is roughly 10%. What is the spider doing right now? So if we were to look over to SPY, okay, what kind of price action is the spider doing? Well, the spider is actually above. So the actual price action inside of the S&P is higher, not by a lot, okay? But you can see that the price action inside of the S&Ps has come off like an unusual bottom. That's actually the lowest it's pretty much been almost in history. It's come off of a bottom and it's closer to 11%. All right, some of the other index products over here. Some of the other index products, of course, would be like IWM, which is the Russell. The Russell, that sucker's clear up to like 21.5%. So this is where you have to kind of question. You're like, well, what's wrong with the QQQ? And a bunch of people would probably say, oh, never mind. There's absolutely nothing wrong with it. Look, even here into the cash close, I want you to actually see something. It's catching up right now on a percentage basis. There's the closing bell. So it's catching up a little bit on a percentage basis, okay? However, it has still been lagging, and the Nasdaq has actually been lagging when we sold off the other day. Like when we sold off on Monday, the Nasdaq didn't move nearly as much on a percentage basis as did the S&Ps, and it continues to the upside, okay? I would actually look for this to stand in really stark contrast in the next couple of days. I'm shocked at this point that the volatility, okay, has not picked up inside of the Nasdaq to exceed the moves. All right, we're coming out of situations where ultimately, all right, you start to step back and look at the indices and you try to be as objective as you possibly can. When you have the Nasdaq, though, that has recently been, if you will, the leader in the pack. It has been the leader in the pack. In fact, if you looked back on a year-to-date basis, and this is also really worthwhile, okay, and we looked back at, we'll go to year-to-date percentage here. On a year-to-date percentage, just recently, I mean, the NASDAQ was, and I say recently, the NASDAQ was almost completely and totally flat on the year, okay? So again, I'm much more of like a quantitative trader. I look at stuff like this constantly. So on flat on the year, it's up basically, what, 3.5%? It tears to the upside, then it's up roughly about 17%. So you see I have a straight shot of about 14% to the upside. Take a look at some of the other index products in the exact same time frame. I say in the same time frame. This is roughly from, let's call it like, mid-May until almost the present time. So I'll go over to the spiders. What have the spiders done in the exact same time frame? So here we are in that like mid-May time frame. They're already up 11%. Now effectively they're up about 17%. You can see on a percentage basis here, okay, the spiders have actually underperformed. But the point that I'm trying to make over here is just in the last few days, this has shifted. Okay, the NASDAQ can't get out of its own way at this point in time. And again, okay, I caution you, the NASDAQ is ready to move big. How do we know that? Because we're looking at things like implied volatility. Okay, implied volatility, and I'm actually going to take you back to the QQQ. Okay, implied volatility, if you go out just 1 week in time, remember, the NASDAQ has been moving at a rate out of about what? 10%. Yeah. Well, how come when you go out, 7 days, it's actually paying you at a rate of 17%? So a lot of people go, oh, I'm going to sell options, because you'd be selling roughly like a 17%, yet the market's moving at about 10%. I would caution you away from that, because this is an absolute gaping hole from which there is no escape. The NASDAQ, this thing is ready to rumble. Okay. And it's going to move and move substantially. And again, I'm going to reiterate exactly what I said on the weekend update, and that is you should expect to see moves in the NASDAQ upwards of 300, maybe even 450 points in a day. And it's going to be a little bit of shock and awe, because again, the NASDAQ is underperforming the S&Ps right here presently, okay? And it's been doing the exact opposite, though, the last 6-8 weeks in there, really since the mid-May time frame. So from mid-May, June, okay, and some of July now. Again, the last 2 weeks, the NASDAQ, that actual movement in the NASDAQ completely dried up. So again, look for some very, very large movements in there. All right, on another front over here, I want to talk about some of the risk factors in the marketplace before we go any further. When I talk about risk factors in the marketplace, what I'm actually referencing is, and I'm really bothered by this, the VVIX. The VVIX has come back down. It was in Never Never Land just on Monday at 150. It's actually come back down, but hey, don't get off, don't get out from under the desk just yet. We're still trading roughly a 122 VVIX, which is pretty incredible. The other aspect that kind of still sits with me, short-term volatility and long-term volatility are like way above where, again, they in theory should be. The marketplace is effectively sitting at an all-time high, but all of your, risk on, risk off assets are still portraying huge risk. I'm also bothered by the dollar here. I mean, the dollar's been on a tear to the upside. The only thing that I can say that has unequivocally changed, okay, are the bonds, okay? But here's actually the danger in the bonds. If the bonds were actually to turn around and continue to sell off, that could actually start to crush tech. When we start to crush tech, and lo and behold, that would be actually your movement for the Nasdaq. Okay, last thing that I actually want to mention on this this Wednesday's update, it's expected move. So this has been just a downright wild week in terms of expected move. We started off on Monday, we breached the lower edge of the expected move. We basically closed on it. Coming into Tuesday, we got that 74 points back. And today, well, the S&Ps are actually going to finish almost 40 handles higher. We're almost halfway home to the upside of the expected move. You want volatility? You got some volatility in this marketplace. But again, I think that you have to be on your game right now because there is no directional feel presently to markets. Everybody's like, no, it's just up and it's up and it's up and it's the marketplace is up. Yeah, but I think you have to pay a huge amount of attention to what the bond market is saying. The volatility in here is just absolutely rocking. In fact, the TLT, I was mentioning this again the other day. When you start to look at the TLT, this should strike fear into the hearts of pretty much every single trader. What do the institutions know that we don't? Break to the upside, break to the upside, break to the downside, break to the upside, smoking them to the upside. Okay. Last week was inside the expected move. This week to the upside. Okay. There is immense amounts of capital right now moving inside of the bonds. When it comes to directional bias right now, okay, I've never felt like more uncertain, but the one thing I will tell you, premium selling, it is on right now. I mean, we're able to sell premium in some of the back month options here, taken off a number of positions profitably, been able to sell premium wonderfully inside of the bond product out there, taking off more positions profitably. I'm telling you, if you don't have that directional feel, and I clearly and evidently do not at this point in time. I'm telling you, I'm looking at the S&Ps and taking a look at the Nasdaq. All I can see right now inside of the Nasdaq is get ready to rumble. There's going to be some wild moves in there. Nevertheless, at the exact same time, I'm telling you, selling premium, it's working. And it is a non-directional idea. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.